For years, it's been the bridesmaid and never the bride. It has been one of those companies that everybody seemed to be interested in, but nobody really wants to consummate the marriage. They've been suitors galore. They've been vying for it, and they've all walked away. Until recently, that is. This is the MoneyMakers. I'm Bruce Whitfield. Tonight, I'm talking to the JSE Chief Executive, Santos, about plans to list and tying up with JSE-listed telecoms company Blue Label, following Telkom's decision to walk away from what looked like a very juicy bid. You haven't had a holiday, have you?
Hi Bruce. Not at all, unfortunately, but been working hard the last couple of weeks.
People have been talking about Telkom, and I spoke to Sipho Maseko probably 18 months ago, and he said, yeah, no, he's very keen on JSE, and went quiet for a long time. Then they came sniffing around, sort of, I suppose, in the third quarter of last year, and very quickly they bailed on you.
Yeah, Bruce, I mean, if you look back, some of the comments I made, even going back 2 years ago, I think Telkom and JSE would have been the perfect marriage, the perfect integration. And it was quite disappointing at the end of the day that, the principal shareholders from both parties basically walked away, couldn't really get to agree on the price, was sort of the fundamental reason. But yeah, having said that, we had to move on, and we put another deal together, restructured, recapitalized the business, so we're moving forward.
Okay, so this deal is Telecom's 100% shareholder has decided it will lose control. It's happy to lose control. About a third of the shares will go for staff, and about a third to Blue Label Telecoms, and Auger retains about a third.
Correct. So Bruce, basically, once Telkom moved in, JSE is a great company. We've been producing good results. Unfortunately, we had this debt-ridden, exposure, all foreign debt, and whatever we produced just went to service the interest. So literally, I sat with the principal shareholder sort of August, September at the time and said, if Telkom doesn't go ahead, can we recapitalize the business? Would you be interested? And he says, look, we back your management. You go and find us a nice partner. I mean, we've been good strategic partners with Blue Label for some time, and I'm a serious believer on vertical integration. So we manufacture minutes, we manufacture megs, we've got to repackage it, and we really want to own that whole value chain down to the consumer and all the touch points. And Blue Label also, are at a stage of their life where they need to look at new ideas and investments. So it was a perfect marriage in terms of, from their side, being an investment, from our perspective, really making sure that we own more of the vertical integration of the distribution chain to the end user there, and that'll create a huge benefits for the end user in terms of pricing, more innovation coming through. So when they agreed to that, also from our point of view, it was really great to see, the staff and employees be part of this, and that took a little bit of doing.
How are staff participating in this? I mean, I'm assuming there's a great big chunk of debt with every staff member at JSE's name scribbled all over it somewhere.
Well, we have to borrow money. I mean, we have to come up with 2.5 billion rand. That's well on its way, so I'm actually quite positive how that is actually turning out. And of course, we've created a special dividend policy within the organisation amongst the shareholders, and that dividend policy will service that debt. And the intention is to list, and this is when the value will be unlocked for the staff. And of course, there's all preconditions tying the staff in, and also management, and making sure that people just don't walk away when we list.
Okay, staff can opt out of the scheme. They don't have to participate. I'm assuming, in the share scheme.
Well, everybody participates, and all staff members in the company.
Is it structured like an option?
Yeah. Well, basically, it'll be an option. We put it in a trust. We service the borrowings that we'll have in that trust. And when we list, obviously, that will be one of the vehicles that we will have an opportunity. Right now, the way it's structured is the staff will have an opportunity to sell 30% of their shares, and the remaining shares over a period of 4 to 5 years. So it's a creative scheme for them. They'll unlock some really good value. The team are highly motivated, so we have a very motivated team at the moment, so really good stuff.
And it's at a time where MTN is very distracted. It's a good time to be motivated.
Yeah, I think from our perspective, Bruce, the last 3 years, we really stayed focused. We didn't go out there and try and be all things to all people. We picked our segments. We picked the consumer markets we wanted to attract. We've been very successful in those areas. In the coming weeks, 4 or 5 weeks, probably be back on your show, we're launching our FTTH products.
That's fascinating, FTTH. Yeah. I'm so pleased. What is that?
Well, watch the space in terms
what is FTTH?
Well, what we've done, we've got some really creative ideas. I think I was on your radio show some time back. What's the price on our data products? So it's really about content.
What is FTTH?
It's really fibre to the home.
Thank you. There we go. That's what we need to know. Yeah. So, I mean, that's because when one looks at JSE fitting into Telkom, and it seemed like the marriage made in heaven. There's Telkom, fixed line, a fibre strategy, slow, but a fibre strategy nevertheless,
absolutely.
and a struggling mobile business. Here you've got a mobile business, all the potential in the world, but you need a market, and there was a good marriage there. Up until now, you've been very capital hungry. You've depended a lot on Auger Telecoms. What happens next time you need capital?
Well,
Because suddenly you've got staff who've got a third, you've got Blue Label Telecoms who've got a third, and Auger will say, we're only stumping up a third of the capital you need this time, buddies.
So Bruce, basically, our debt was in the high double-digit numbers, extremely high. Once this has been recapitalized, we're looking at about 6 billion rand worth of debt. If you take our current operational cash flows, we won't be needing any shareholder, capital injection into the business. We'll be spending in the region of about 2.6 billion rand worth of capital investment year on year, and the business can sustain that. So we have a good plan. We know where we're going. We know where that capital is going to be invested. And unless something changes in the market, shareholders will say, well, if it makes a good return, we'll support you. But right now, with our current EBITDA, and unfortunately I can't disclose what that was.
No, it's very frustrating. It's very frustrating.
We will soon, with Blue Label being listed, we'll be more transparent and more open with our results. But you're looking at a very healthy EBITDA at the moment, healthy EBITDA margins, and the multiples EBITDA to capital investment are quite good. So, we're confident we don't need to go out there and borrow money too quickly, too soon.
Okay, and that's going to be absolutely crucial as well.
Yeah.
The fact also you've reduced the foreign component of debt.
Yes.
So with the rand at 17 to the dollar, it's a lot less scary than it was, say, a year ago.
Absolutely, and the 6 billion debt that will stay will be locally based.
So it's rand denominated
absolutely,
debt.
no foreign debt going forward, and that was the precondition of, the shareholders sitting together, the three parties, the, employees, Auger and Blue Label, and we agreed on that, and all this is taking place, and a lot of hard work behind the scenes, but we're getting there.
Cell C's always been it's really promising. It's a little bit like the South Africa story. It's always the most promising country on the African continent, and it fails to really realize its true potential. Is this Cell C's opportunity to realize its true potential?
Bruce, no doubt. I mean, what was hampering the company was really our debt. All the innovation that we wanted to do, all the expansion we wanted to do, we were hampered. We were just producing good results, but paying interest. I don't think we even serviced 1% of our capital during this period of time. So with this recapitalization, it really puts Cell C financially in a very good footing, and gives the employees and management to, the opportunity to deliver on the real strategy that we set out, I think, 2 years ago. And that is to continue to be disruptive, be innovative in the market, bring the prices down, create more efficiencies in the products that we offer, and really focus on true excellent customer service. We really niche about who we target, where we want to play, and we deliver all those components to those market segments, and that's really been the success. And with this recapitalization, having all your employees only a third, I mean, it's really good news for us. And I think 3-4 years from now, when we do list, and building up to that, I mean, the markets aren't sort of in a position where we could even consider a listing, I think, over the next 2 to 3 years. But certainly they'll recover.
But you're looking at a 2020 listing,
absolutely,
roughly.
Yeah, give or take. Yeah.
All right. Now, up until that point, I mean, here is the business where you've been the number 3 cell phone provider in South Africa. You're probably going to be the number 3 cell phone provider in South Africa because of Vodacom and MTN's massive head start. But people have been very critical of line quality, for example. It requires massive capital investment to get signal quality, to get the reach of your competitors. What's the plan on fixing that?
Bruce, we fixed it. I mean, the last 2 years we've put in about 4.5 billion, close on 5 billion rand on capital investment. Our network today is the same or better than any other network. I mean, in outlying areas we use the Vodacom network to roam, so we have full access to their 3G network in outlying areas. We focused in the metropolitan areas. Today, if you use our network in any area, is no different to other. We have LTE, we've launched LTE in Gauteng, Western Cape, KwaZulu-Natal. This last year, 2015, just over 500 sites were installed in new areas, providing better quality, better service. So we are suffering from a perception problem. But if you take the rate of growth of our customers, if you look at how many customers are churning from us, customers who come on board, experience us, say, well, they're actually better than we thought. So it's a process. It's really a marketing campaign, getting out there, a PR campaign, and making sure that customers who come on board have a good experience. We can't be all things to all people. Obviously, there are 1 or 2 areas that you'll never be able to get your coverage right, and that applies to any other operator. But overall, we're not where we were in 2013. I can absolutely, convince myself and consumers out there that we're at the same level or better in many cases. Sitting here in your offices a few minutes ago, full LTE signal downloading at 25, 30 megabits per second, and this is what we're looking for. So it's taken a lot of time, effort and money, and going forward that investment's going to be maintained.
What's so extraordinary also about how suddenly South Africa has caught up with the mobile revolution, and in many ways we're leading the mobile revolution. More South Africans have got access to the internet courtesy of cheaper and cheaper mobile devices.
Yes.
And that's where the data play comes in. Finally, data is beginning to pay.
Absolutely. So, and also you've got two levels of data. You've got mobile data, so your LTE. I mean, we're already beyond trial phase on LTE Advanced, so hopefully towards the middle of this year, we'll see LTE Advanced technology being rolled out. I'm not going to get into much of the debate of spectrum. All of us need spectrum to make sure that we actually roll out these technologies more efficiently. So that's on the pipeline. But also, in terms of the fiber to the home, this is where really the cost effectiveness is going to come. So we've engaged many fiber players out there to aggressively roll out fiber. We're going to come out with some very aggressive packaging, and no longer are you going to sell packages of 10 gigs or 20 gigs or 30 gigs. We're starting to look at packages of 200, 300 gigs because Showmax coming on, Netflix, all these are high content
devourers of
absolutely,
bandwidth,
and consumers want that. They want access to that, and they're not going to be paying the exorbitant prices that they pay now. So you're going to certainly see a big differential between the price of data on a fixed platform, which we would refer for the ease of your viewers, fiber to the home, and then you have the mobile data, sort of pricing. And you're going to see a clear differential and big gaps between the two.
No, I think it's an exciting time ahead, and certainly a more competitive landscape is good for all of us.
Absolutely. I mean, in Cell C's, contrary to all the criticism 3 years ago, we're going to close down. We've been there, we've disrupted the market, we've brought the pricing down, we've increased the level of service for consumers, and we'll continue to set that pace. And one has to measure where you are in the market, not only by in terms of revenues or number of customers, but there's a lot of number ones that we are. We're the best innovative, we bring out new products. I mean, see the debacle going on now on OTTs. Other operators don't want to embrace the OTT players. I mean, we embrace them. We give you free access to WhatsApp, we give you, free access to Facebook, and we have good relationships with these players, and it's creating a whole different new market out there.
You've got to bounce back, haven't you?
Absolutely.
There we go. He's got energy. Cell C Chief Executive Officer Jose dos Santos. No December holidays for him as he was working on bedding down the restructuring of the shareholding of Cell C, Telecoms with about a third, staff with a third, and of course Blue Label Telecoms with the other third, and a listing for this business. The target, give or take, 2020. Thank you for watching. More Moneymakers tomorrow. Till then, bye-bye for now.